Hi, it's Philippa Sheridan here, and in this video we are going to take a short look at derivatives and how they feature across the CFA curriculum. So first off, syllabus weightings. So you can see I've got a column for 2023 and 2024. I'm aware that people watching this video might be studying for either. The good news is it's the same weighting for both years, so derivatives is not changing much from one year to the next. Between the three different levels, it's also pretty similar weightings. You can see 5 to 8% for level 1, and then it just stretches a little bit, 5 to 10% for both level 2 and 3. So it's consistent throughout your CFA journey. Why do we look at derivatives? Well, it broadens your understanding of different investment possibilities beyond the typical equity and fixed income markets, which make up larger sections of your CFA syllabus. But things like derivatives, alternative investments, are just as important to have an understanding of. Some of you may already have had exposure to derivatives within your career. So the idea with this is that even if you haven't had exposure to derivatives, by the time you finish your CFA qualification, you should have a good understanding of how these work. You will broaden your understanding of what they are, and we'll talk about that in a second, but what they are, how they are valued, and when they might be appropriate. So when would it be suitable for a client to make investments in some derivatives? Now, in terms of the key topics, this works in a similar way to many other topic areas in that level 1 is quite theoretical. It's the understanding of the basics and some calculations, and then as you go through level 2 to level 3, it becomes more practical and applied. So level 1, first of all, looks at what are derivatives. It looks at the common terminology and how the market works. It considers what benefits and risks there are for both parties, so for the issuers of the derivative instruments and also for investors. And then it moves on to thinking about a few specific derivatives. So we look at forwards, futures, swaps and options, and thinking about how these are priced and how they are valued. Finally, there's a small section, once you've been introduced to options, there's a small section on how options can be replicated. As we move on to level 2, of course there will be new content there, but the ideas of the types of things you're looking at remain fairly similar. So the focus is on forwards, different types of forwards, so that would be with interest rates and other types of forwards as well, commodities, etc. And it's giving a much more detailed look at how these are priced and valued. So that was introduced at level 1, but it becomes more detailed at level 2. Similar with swaps, so swaps are introduced at level 1. We have a variety of different swaps, so interest rate swaps, currency swaps, for example, and those are looked at in more detail at level 2. And then finally, contingent claims. There's a brief mention of contingent claims at level 1 from a terminology perspective, but this is looked at in a lot more detail at level 2. Finally, at level 3, the focus is on strategies. So you have the fundamentals, you have the theoretical understanding by the time you get to level 3 of how these work. Level 3 is then about putting that into practice when they might be appropriate and what strategies to follow. So this is looked at for options. So they would be equity options, they would be interest rate options, swaps, forwards and futures, so all terminology you've seen on the last few slides, but the focus very much more on how they could be used for a particular investor's requirements. There's then a small section in level 3 on currency management, which hasn't been looked at in the previous levels. In terms of top tips for studying derivatives, if you are coming into studying derivatives with no prior knowledge or experience, I mentioned some candidates will have knowledge or experience before, but many don't. It can feel quite abstract to begin with. Try to focus on the bigger picture of what each product, so options, forwards, futures, etc., is to start with at level 1, and then as you go through the different strategies as well, try to focus on that bigger picture of what each one of these is achieving. Don't get too bogged down in the calculations. Now remember, derivatives themselves are a relatively small part of the exam, 5 to 8% at level 1, 5 to 10% for the later levels. So within that, actually doing calculations are going to be an even smaller proportion of your exam. So try not to get too bogged down in those calculations. It is tempting to spend a lot of time on those, but try to again focus on that bigger picture, the understanding of what these products are achieving. You'll see terminology cropping up, and you'll be looking at profits, and you'll be looking at cash flows, and you'll be looking at benefits and risks. Try to compare the different products and the different strategies. I find that's one of the easiest ways to get to grips with this topic area is by comparing and contrasting each product to the next. So for example, for level 1, once you've had an introduction to forwards, when you move on and look at futures, comparing what's similar between a forward and a future and what is different. So that's a brief introduction into the world of derivatives for your CFA exam. I hope you found that useful. Best of luck.